Alright, welcome back. First of all, this is not financial advice. This is more of an educational channel, entertainment, and learning how to trade. Consult your financial advisor. I'm not a licensed financial advisor. These are just my opinions. I could be wrong. I am wrong sometimes. Mostly right, but it's all about timing. Do not invest anything you're not willing to lose or lose sleep over. Let's do some TA. Alright, so I've been waiting for a correction for a while, right? And it's finally, looks like it's started. We sort of had a little bit of a dead cat bounce this week, in my opinion. This is the S&P 500 monthly chart. Every candlestick represents a month. So this is a clean chart. Goes all the way back to the 80s. And you could see this is what the market's done in the past 2 to 3 decades, right? Now, I wanted to start off with the larger time frame because this is how you do trend following, basically. And I'm going to start with the longer time frame here, the macro, and then we'll dig deeper into the shorter term moves. So right now, this looks like a perfect correction, the beginning of a larger correction. We're a little bit over 6 weeks away from the election, right, in the US. And it's been a hectic year. It's been, we'll never forget 2020, right? As we get closer to January 3rd, I expect volatility. I expect a further correction in the markets as people get nervous. And then we do not know what happens after the day of the election, if there's going to be shenanigans or whatnot, if there's a clear winner, right? We don't know. I've posted about that in my newsroom. And we'll see. So just based off of that, if there's no clear winner, I do expect a serious correction. Okay? A sharp drop. At least around the 50 fib retracement that I have over here. All the way to the right. Now, this zero, it doesn't go all the way back down to, 81. Because this is technically when the market really started breaking out. And the bond market went into a bull market, and that's why the bond market pretty much caused a giant bubble in equities and everything, and that's mainly because of central bank manipulation. But I'm not going to bring the zero all the way back down there, because even if the market, let's say, crashed, and again, I've made a video, know the difference between dips, pullbacks, corrections, and crashes, right? In the macro scheme of things, well, these, again, real quick, these were crashes. This is a correction. This is a correction. This was a huge correction earlier this year. If we zoom in, this is a pullback. This is a dip. This is a pullback. And know what time frame you're on. Some people just can't figure that out. Alright. But if we don't have a smooth election, right? I expect a serious correction. And for the next 6 weeks, I do expect more of a steady decline and pullback. So this is a pullback. We get a clear winner in the elections. And I'm thinking Trump, right? Then we'll get a rebound and probably maybe trade sideways for a little bit and then go higher. If we don't get a clear, concise victory, I expect a serious correction. Now, the Fed will step in at certain support areas. One would be down around 2,500 on the S&P 500. Another one, if it keeps falling, they would definitely step in. Now, if the market, this would be considered a crash if it went all the way down to 1,500. That's a full-blown, like, 2008 crash. I don't know if that's going to happen. I'm just giving scenarios. But if anything, the Fed will step in somewhere around 2,500 if we get a crash. This is still another sort of crash. They would step in so it doesn't make a new low, because we had a low, remember, around 2170 in March of 2020 this year. They wouldn't want the price action in the markets to make a lower low. And this is also assuming we don't know who won, and it looks like Biden's going to take the helm, right? Then at least minimum, I expect the market to drop to 2,500. But it could keep going and revisit my blue equilibrium line somewhere around 1,500, 1,600, right? That's the worst case scenario. If this happens, you better believe metals are going to sell off again, like they did in March. Just like they did in March. Except maybe even worse. We don't know. We're going to find out. Now, if everything goes smoothly, up until the election, let's say Trump wins, we could still have a decent correction, at least down to the 50% fib retracement, somewhere around 2,600, 2,500, right? And then he wins, and then the market will bounce, maybe trade sideways for the first half of 2021, mainly because the FANG stocks are going to be selling off. Financials look weak. The economy globally is in a depression right now. And there's going to be bankruptcies, Lehman Brothers type events, this and that. But that doesn't mean the market's going to crash. Why? Because there's going to be more and more and more stimulus. All right? And then governments are going to step in, maybe MMT, and then infrastructure spending and blah, blah, blah. And then the market goes higher. Don't look at the bottom here. Don't look at the dates or anything. I'm just drawing, okay? But either way you look at it, it's a big, fat, ugly bubble, right? The question is, well, for one, we need to wait and see what happens with the election. And then from there, we could move on from there. So speculating on that, theorizing right now is I'm just doing it as a brain exercise, but I'm not it's still too early. I mean, all right, so let's do a little more short term for the next 6 weeks, I guess. Let's go to the weekly. For now, this is a perfect shooting star. It's, I mean, this is a textbook sell signal. This candlestick right here. Actually, that's a doji. But the candle, this week's candle, is trading below it. And that's all you really need. And this is a bearish pattern, these two candles. If we get another week down next week, then that's another bearish pattern, which is very strong. And then the correction's in full force. I expect it at least minimum. I mean, it's going to hit support at around 3,000, but we're definitely going to 3,000 at least next week and the week after. And then there's going to be more crazy stuff happening next month. October surprises and whatnot. So we don't know if the price could very quickly, this correction could accelerate all the way down to the 200-week moving average, which would be around 2,800, or to my blue line around 2,600, right? And this could happen quickly because there's really just air. We don't really have any support from where the price is right now to about 2,800. There's just a lot of air. It's just an air pocket. There's no support. And a lot of this price rise right here was due to the tech stocks and all the moon boys on Robinhood and just degenerate gambling and call options just moving, derivatives just moving the price up. And revenues and earnings, the fundamentals are not going to get any better moving forward from here. I mean, they might get a little better because the cold season of 2020, I think, is over. It should be over. There's no reason why people are still walking around with fabric or paper on their face. It's actually very depressing that people are still doing it. By now, I mean, that just proves to you how sheep they are. And it's very... I've lost faith. But let's stick to TA. So very quickly in the next 6 weeks, the S&P could definitely go down towards 2,800. And I am actually thinking that is the most likely scenario. It's also probably going to pull down metals, which is great. It's going to give us another buying opportunity. What is scary, although what is going to be scary is if let's say the election isn't there's no winner, then the whole market and metals and all that could keep falling, right? Because you're going to see panic. And the Fed might not even be able to stop it. And we could see a serious drop. I mean, hold on, give me a second. If the worst case scenario does happen, I mean, we're looking at a serious crash. And nobody's expecting this, actually. Nobody. I actually don't want to see this yet either. But it's a possibility. And actually, if the market did do this, it would reflect the true nature of the real economy on Main Street in the real world. This is where the market really should be. Somewhere down here, not further down. But let's say because of the debasement of the currency and all the stimulus and the money flooding in, liquidity, this would be, I would say, more well priced and normal for the market to drop all the way down here. And that would be a huge drop. This would just wreck everyone. Portnoy would be crying. Everyone would be just annihilated. That'd be like a 50 to 60% drop. This would be your 2008 crash all over again. Basically a 57% drop, somewhere down there. And it's very possible. And I think that this would happen if we didn't have a clear victory for the election and they kept dragging on for weeks. Then we would see this happen. But if we do get a clear victory, we're still going to see some sort of correction. Either we're looking around the 200-week moving average, somewhere around 2,800, or maybe even as bad as 2,600, let's say that. Either way, I expect a correction in the next 6 weeks. And then after we finish this year up, then we could speculate what's going to happen. Because the price could be anywhere, right? Price could be somewhere around this area by the end of the year, or it could be all the way down here. And I told people in the private group, if you don't know what you're doing, if you don't know how to hedge, you better not have a margin account, and you shouldn't be dicking around with leverage ETFs or anything like that. And just know that if the correction's bad enough, which I think we're going to get a decent correction either way. I mean, more than likely everything's going to drop, just like it did in March. And then your options could expire worthless. Which sucks for me too, because I have a bunch of options still on. I'm not sure what I can still see them becoming profitable in the next few weeks, but after that, I might just take profits and then raise more cash. I already sold months ago, or a month ago. I already took profits on my mining stock, ETFs, and leverage stuff, and I've raised cash. And I've been sitting on that lately. So, and not doing much besides research, because I've been waiting for this correction and it looks like it's finally started, right? Alright, let's go to the daily, see what that looks like. And this is trend following. I went from the monthly to the weekly. The previous chart was weekly. Prior to that was monthly. So, let me show you real quick. This is monthly. I started at the top. Now this is weekly. This is daily. So we're going to see some decent support on the daily come in at around 3,000. 3,000 will be pivotal to see if the correction continues, and it'll be a much deeper correction, giving back most of the gains from the tech stocks, from the stay-at-home stocks, pretty much being the tide that raised all the ships. The only reason any of this is difficult is because of the Fed. Because the Fed will start freaking out fairly soon. I mean, if the S&P falls, starts getting close to 3,000, they're going to start freaking out then already. And they'll try to start putting in a bottom to the market, like not letting it fall further. But you never know, right? So because of the elections, let's say everything goes wrong with the elections, even the Fed won't be able to stop the panic and the fear. Because most of the people who own stocks, I would say they're on the right, and they would panic. Now, you could make an argument, then they will panic into metals, and metals won't fall. I think metals will still fall, but they just won't fall as much as the rest of the equity markets. So you'll do better by just holding metals and holding on, right? Now, granted, I said that I took profits on my ETFs, leverage ETFs, call options, and everything like that. Everything that was leveraged and leveraged up to the mining stocks, I already took profits on those because I don't want to hold those during a correction and a sell-off. Matter of fact, the ETFs and the mining stocks have already sold off, but like I'm saying, there's probably going to be more selling. And that's only because of the margin calls, because the entire market's falling. But that doesn't mean I didn't sell like all of the individual mining stocks that I'm holding for individual companies. I'm just going to hold those for a couple reasons, right? For cap gains, taxes, and then I'm holding so many, I'm just going to hold through whatever. Like, let's say my account, my brokerage account's like 100 grand. I'm holding probably around 60 grand worth in mining stocks still, but the rest is in cash or in a active trade. So 40% I'm out pretty much. And I'm looking to buy the dip. All right. So on the daily here, if we take a closer look, I think the price is, the only reason the price kind of bounced today and this week was because of the 50-day moving average. But we're definitely going to go back to the 200-day moving average at least, in my opinion. That's what I'm looking for. And that would that constitute as a correction or a pullback? I would say that's a correction. That would, if the price gets all the way back down to 3,000, that's a nice size textbook correction. I just don't know what's going to happen for the election. So if it's not a smooth election, like, then I expect something more. Now, I'm not saying the price is going to go all the way back down to the March lows, but it's probably going to go close to it. The Fed's going to keep panicking, and they're going to come out with some serious they're going to come out with everything they can to give you some sort of dead cat bounce or something, right? But again, I don't know what's going to happen. I'm not a prophet, so I'm just saying you kind of have to be prepared for that. But if everything goes smoothly for elections, I mean, we'll probably fall below the 200-day moving average, even my blue line for a little bit. Maybe get down to a little bit below 3,000 to 2,800, something like that. And that's also assuming Trump wins. And then I'm not saying we're going to get a rebound to new highs or anything. I'm just saying that'll put a bottom into the market. Maybe give you a nice some sort of rebound, but not a reversal and making new highs. To get the market to make a new all-time high is going to take like the central banks and the Fed doing another 10 trill added to their balance sheet. Right now, I think it's around 7. By year's end, I mean, it'll probably be, again, 10. But then on top of that, another 10. Which would be pretty insane. And then everyone's going to notice inflation, even your average normie. So this might have been it. The all-time high ever. But it's even early to say that. Because if Trump wins and the Fed does, MMT and just they start doing crazy infrastructure spending and just ungodly amounts of stimulus, yeah, the market can make new all-time highs. But then again, would they do that? Probably not, because that would be extremely irresponsible. Because there's no need to do that. And if they, because there's, Trump wouldn't be looking for another re-election because it would be over. You could only do 2 terms. So this is the big one. So if he wins, I think the all-time high ever might be in. And after that, it's just damage control and landing the plane with the least amount of damage, just a soft landing. And then later, things might get crazy. Or they just might keep it going sideways as they keep printing. Maybe something like this, Alright. Alright, so let's continue. Let's look at other things. Here's S&P on the weekly chart. My indicator is called the top very, very well. Now, my last 9 sell didn't work out so well, which really sucks because I really started shorting over here. And then I didn't, I should have waited though, but I didn't. But I caught this top too as well because my indicator, right? So that worked out. Let's give this a second to load. Here's Apple. So the way Apple goes, I feel like the rest of the market's going to go. And their sales are not as... Their estimates, there was an article that came out today. I posted it in the private group. It's not that great. And I expect more downside on Apple. And they did have that stock split, so did Tesla. And I shorted in the private group. I put it out. We shorted it up here, right? Around 130, 128. So it's working out pretty well. But I expect more selling on Tesla. Easily. This is a 4-hour chart. Let's go to a daily. I think the daily tells it well, mainly because the rise was so quick in the price. There is a 9 buy though. We'll see. This 9 buy could be ignored. They don't always work out, but it worked out very well back here. So we'll either see a dead cat bounce next week, or it's just going to ignore it and go lower and lower. Either way, in the end, in the next few weeks or month and a half, I expect the price to at least revisit the 200-day moving average around $85, somewhere around there. Which will drag the rest of the market down with it. I'll get some metals. Let's just get through everything else. We'll look at crude and all that. This would load. The VIX popped, but then it fell back down. And believe me, the VIX is manipulated. If anything is, it's the VIX. But don't worry, I still think it's going to go back up. We bought the VIX in the private group a couple weeks ago. It's up for me, but I expect more. I'm going to hold it longer. I may actually put another call on that one. By the way, the market's about to close in 4 minutes. So I just realized, I thought it was earlier. I thought it was only 3, but it's pretty much 4 p.m. right now, U.S. Eastern Standard Time, the 11th. And never forget, the U.S. changed since that day. And I don't want to get into, the tinfoil stuff, but if there's anything to research and keep researching, that is the one. And I've seen everything on it. I posted stuff in the past. I'll just leave it at that. Let's look at the dollar. So I've been saying, once the market starts correcting, it's gonna prop up the dollar as a knee-jerk safe haven reaction, because everyone sells stocks and then goes into dollars, which props it up. Not just that, the EU just announced more stimulus. Their banking sector is still in trouble. It's always going to be in trouble. It's a zombie sector now. But it put in a nice stop to its decline for the short term. This is a weekly chart of the DXY dollar weighted index against other fiat currencies. Now, possibly the dollar could bounce, retest the 200-week moving average, and then probably lower, because as the market keeps falling, the Fed's going to come out with more stimulus, which weakens the dollar more. But in a nutshell, what I'm saying, for the next few months or until elections, right, we're looking at a dollar retesting 200-week moving average and then kind of stuck range bound for the next few months, maybe till the end of the year, and then we'll see if it breaks down or goes higher. Because it could break down, or it could test the top range of this range bound, and I don't think it's ever going to get back above 100, but it might go test it again. I don't know, because I don't know how much stimulus they're going to come out with to stop the market from correcting. And I don't know how hectic, again, what's going to happen 6 weeks from now, right? Either way, for the very short term, some dollar strength for the next few weeks. And then we'll see what happens with equities, how far they drop. Because at some point, once the bottom's put in equities, and it all depends on how far equities fell, the bottom's going to be put in with the Fed. And depends how bad they panic. If they panic really bad, the dollar is not going to be able to get back to the 100 handle. And by the way, that pretty much puts the nail in the coffin for the milkshake theory. Like I said last few videos ago, I think the milkshake theory has already played out. I think the milkshake theory was literally this right here, and it's done, and it's played out. Now, granted, it doesn't mean that the rest of the world's not going to print. They are. But at the end of the day, none of this matters. Eventually, gold and silver is going to shoot to the moon. And a lot of people look at the DXY versus metals. It affects it a little bit, but not as much as it should or it could. Mainly because the DXY, again, that's the dollar versus other fiat currencies, and they're all being devalued. So that's why we saw, actually, in 2019 and 2020, DXY go higher and higher, and metals went higher and higher anyways. Let's take a look at bonds. Now, this is what's interesting, right? the central banks in the background suppressing the yield. This is the 10-year yield on treasuries. And that's what's keeping everything going, because if yields went up, debts come due, and then the whole damn thing falls apart. So, but the problem with yield curve control is it distorts everything by so much that there's nowhere to hide. So if the equities markets are falling, right, and then the Fed's stepping in with stimulus, bailing it out and putting a stop to the fall in the stock market bubble, essentially, and propping everything up, they have to print more and more every time. Because it takes more every time, because all debt is credit, and all credit is fiat, and all fiat is debt and credit. So, and then there's interest on top of all of it, which means they have to print more as time goes on. Meaning the bond market technically becomes larger and larger, but less and less people are going to be trading bonds because there's no price discovery and there's no volatility, and then you can't make money in the bond market. And then again, it's not a safe haven, as they've been teaching everyone for like half a century in universities. Oh, bonds are safe because they're government guaranteed. And yeah, but you're buying currency, and if they keep printing and buying bonds, and that's how they keep the yields low, because that's how you do yield curve control. The central bank comes out and buys bonds because there's two reasons. There's no other buyers, no other fool, and that's what keeps the yields low. Because yields go up on bonds if nobody's buying bonds, right? Because demand goes up, so they have to pay higher interest. So central banks just buy bonds by printing money with money they printed. So what are bonds? Bonds are money. It's literally just, treasuries are literally just wads of cash. That's how I think of it. So if the equity bubble kind of pops, right? The safe haven isn't bonds, because inflation is running higher than the yield you're getting for your bonds. So there's nowhere to go except for metals. And that is the ultimate wealth transfer. And that's why joining the private group might be a smart move. Can't guarantee anything. I will guarantee you'll learn something. That's why I'm researching all these mining companies, and we're looking for undervalued ones. I mean, they're all undervalued in the grand scheme of things, like all of them. Except for the ones that are really managed bad and they don't have reserves in the ground, and then there's legal problems in jurisdictions. There's all kinds of pitfalls, and it's a very risky business. It's high capital, high intensive capital type of business, right? So it's not easy to make money in mining unless gold goes to like 3,000. Well, actually, all gold has to do is stay where it's at right now. And the shares of these companies are still undervalued to where the price of gold and silver is right now. But the short term, like I said, I do expect a correction in the next few weeks and months. But that'll be the very last dip buying opportunity before the train is fully gone and out of the train station. So you want to get on that last caboose before it takes off. And that'll be our ultimate last buying opportunity. And then after that, you could just sort of sit on your ass for the next couple years and continue to watch the world just go into clown world. And, I don't even want to talk about it. It just makes you angry, right? Anyways, bonds. At some point, the bond market... I don't know if it'll when or if or when yields are going to spike and the 30-plus year bull bond market blows up, but it will probably at some point. Don't know when that's going to be. Don't know if it's 3 years from now, 5 years, or 6 months. I really don't know. Because I don't know to what extent. There's a lot of things at play besides human psychology, you know, in the dollar, but it's also global macroeconomic developments, because at the end of the day, the dollar is still the world reserve as of right now, and it's still the best alternative, or still the best alternative versus other fiat currencies and bonds for other countries, in my opinion. So the dollar is still king. But we'll see. I mean, China's doing even more stimulus than the US, if you look at it percentage terms. Europe is doing just as much, if not more at this point. I don't even know. So I'm not saying the milkshake theory is going to play out. I don't. But is it winding slowly down? Yes. So I don't know how long they could do this yield curve control policy. They might be able to do it for a few more years. It doesn't matter. Metals are still going to go up during this entire time. It's all question. The question is, when does the manipulation literally stop? Because they can't. Because the confidence of everyone in the markets, they lose confidence in the whole thing, right? I don't know when that's going to happen. So, but for right now, the blue line is 10-year yield. Orange line is gold. Green line is equities, like the S&P 500, NASDAQ, and all that. So, as you can see, the more the 10-year falls, the higher the market goes, higher metals go, and all that. But if we do see a little bit of a spike, which we could see a little bit of a rise, right, in the next 6 weeks as things get very hairy for the elections, it has some room to run up before they smack it back down. They probably don't want to see it get back above 1%. But it can real quick shoot up there, and then they'll smack it back down. But if it does do that, guess what's going to happen? Equities, even metals are going to drop. All right, let's move on. Here's the Euro USD. So the Euro finally stopped rallying against the dollar this month. Let's go to a weekly chart. And the ECB just came out with more stimulus. So now I expect it to fall back into this range. And this was technically a false breakout. And I kind of warned about that. I said it. I don't think the euro is going to just keep going higher. It's kind of a false breakout now. So if you're a currency trader, so what that means is the dollar is going to strengthen against the euro. And the euro is the biggest competitor to the dollar globally. And it also makes sense. And it's perfectly timed with an equity correction for the US. Here's the Dow Jones Transports. I feel like it's definitely hit a peak here, an intermediate peak for now. And this isn't really reflecting transports like in the real economy. It's just equities at this point. It's like a derivative. Anyways, I think it's hit some serious resistance up here. And I think it's going to get smacked back down. And the way transports go, the way the equities go. Now, a nice correction, maybe back down to the 61.8 fib retracement for the next month and a half, till 2021, till the end of this year. Now the recovery story I think is over, because we're gonna get more earnings for Q3, and then I think some serious weakness is gonna start showing up for all these major corporations, and I mean even the mid-tier companies and the small mom and pop shops. I mean half of them are gone, and I swear to God, if they try to make this new normal, this cold that's been going around the world, if they try to make this a new normal, I mean, it's going to destroy the global economy, or what's left of it. It needs to end, guys. And everyone needs to do their part. Talk about it. What's your opinion? Create an account. Talk about it on social media. I don't want to say certain words, but listen. In the U.S., only 12,000 perished from it, from solely the cold. The rest of them, they had other complications prior to it, and then they probably just slapped it on top because hospitals get money. 12,000, that's nothing. In 2018, it was like 80,000 died from flu. This shit needs to end. This cannot become a new normal, and the sheep are just going along with it because they're freaking sheep. And I'm telling you guys, I kind of sympathize with these people, these elite, because if it's this easy to take 7 billion people and get them to like herd off of a cliff, then they kind of earned it. I mean, if everyone goes along with it and it's this easy to scare people and get them to do whatever you want, then they're just robot. I mean, I kind of look at people differently. They're like mindless meatbags walking around with zero critical thinking. And at that point, it's like you don't even have your own thoughts. Then what are you? Who are you? Do you have any individualism to yourself? Is there anything unique about you? Because I mean, this is a huge test for humanity, and it's just so depressing that everyone's going along with this. I mean, then you're going to get exactly what you deserve. Or, I mean, no one deserves any of this, but what I'm saying is, doing nothing and just letting this happen and not doing research, you would think that people would finally wake up and see through all this bullshit. Now, a lot of people do see through the bullshit, but doing nothing is even more pathetic, right? At least I'm out here with thousands of people, and trust me, a lot of people watch me with a lot more people, and at least I make a difference. I can literally see it in real time. But everyone has to do something. Like, I'm pissed off. I'm so pissed off. There shouldn't be civil disobedience in the streets over what the parasites, are doing. There should be disobedience over this BS cold. I don't want to say certain words. I have to literally talk in code. Why do I have to talk in code? Because most people, 99.9%, are fucking cowards. That's why. And I'm not powerful enough, not yet, to do anything about it. Matter of fact, if you look at my comment section, I mean, people are just getting unsubbed. And I don't know how much longer I'm going to be on here, so I'm just trying to hold off as long as possible. And from now on, I guess I have to stick to literally economics and TA and not trigger words. It's pathetic, the world we live in. I'm going to be alright. Personally, I'm going to make it either way. but the rest of you are screwed. I'm telling you, if everyone doesn't wake up and pull their heads out of their asses and get pissed off, this is why you guys need to get your testosterone levels up. Should be, you know, back in the day, people wouldn't put up with this. There's literally uprisings over like a 5% increase on tea, on the price of tea. All right. Here's the E-mini light crude oil futures. Sold off this week and last week pretty sharply here. I don't think oil's going to sell off much further. Maybe another week. E-mini maybe back down to like 34 bucks, but that's about it. It's not going to go revisit its lows. I mean, even if the market seriously crashes hard, I think oil will hold up because it's energy and a commodity much better than the rest of the market. Maybe people will even go into oil as a hedge. Some dynamics are going to change in the markets moving forward by the end of this year, I believe. And I believe oil and energy and commodities are going to be one of them. Here's WTI versus dollar. I mean, the worst case for WTI would be like 25 bucks, but I don't even think it's going to go that low. I mean, it all depends on how bad the market drops, right? If it's a straight up crash airdrop, then yeah, it could go down to 25, 24 bucks. But after that, that's a buying opportunity in my opinion. And then after that's it. Like, that's the bottom for oil and energy, probably for a decade or so or something, for many years, right? Then after that, it's just going to be a bull market in my opinion for the next few years, if not a decade. It's just got to get past some major resistance up at around 70 bucks. If we could get it past 100 bucks, yeah, I mean, we could definitely see 150 again a barrel oil, but that'll be in a couple years, right? If not 3 or 5. We'll see how fast it'll happen. I mean, it's probably going to take a year or two to break through 70 bucks. Here's all the equities, the indexes. There's not much to look at there. I mean, there is. I just don't want to make a 2-hour long video. Here's the FANG index on the left. Here's the NASDAQ composite on the right. Yeah, you see how the price almost revisited my buy signal? These are daily charts. Yeah, I definitely think these indexes are going back down to the 200-day moving average, if not my blue line. So there's plenty more for this correction to fall. I mean, we're looking at anywhere from a 23% decline to maybe even a 30 or something like that on the FANG index. Same with the NASDAQ. Next month and a half, something like that, right? Russell 2000. It's sitting on support now, and then there's some more support down at around 1465. This is a daily chart of the Russell. The Russell's hard to look at right now. By the way, the Russell never made a new all-time high. Matter of fact, if we move out and looking at the Russell gives you it's like a future barometer. Wow, look at this. Is this a broadening top. You know what? Let me look this up. Here we go. Huh. Oh, that doesn't look right. Here, let's take a look at this. So here's a broadening top. This actually does not look like the Russell 2000. This is not a broadening top. But you know what does look like a broadening top? Here's S&P 500. So it's not a broadening top either. It's not exactly a broadening top. But sort of is. No, not really. Well, a giant broadening top. Yeah, I guess if you looked at it from 2016, if we're looking at it from 2016, this could be a giant broadening top, which would give you the giant crash of our lifetimes, the biggest market drop in our life. That would be nuts. Well, I guess this would be the biggest broadening top ever and would signal the end of the century of bull market for the US. But it would have to take out the previous low in S&P. Right, so if the previous low was taken out, this is a daily chart. Let's go to a weekly, it looks better. Yeah, there we go. Yeah, so if we actually get a correction below, this is why the Fed's going to defend it with everything they got. If the price actually corrected in the next couple months, let's say the worst happens during election, and it falls below 2,200, then we had the largest broadening top ever, and then party's over, man. Like, it's over. That was interesting. Alright, let's take a look at gold and silver. I mean, there's not much to look at. Oh, well, let's take a look at Tesla just because. Because it's fun. Still a long way down for Tesla. And it had a nice bounce in the past few days. I might actually, Monday, put on another short. Because Tesla is priced to be the biggest auto manufacturer in the world. Right now it's valued, its market cap is like all the auto manufacturers, combined. Meanwhile, I don't want to get into it, but this is absolutely insane and ridiculous. So I think the top might be in forever for Tesla here, especially if the rest of the market sells off. Anyways, we shorted it in the private group a few days ago or last week around like 4:30. So, or no, was it? Actually, technically, it might have been. I don't know. 470. I don't remember. So it's bounced up there. I might add another. Although we're going to get a 9 count on the daily for Tesla in 3 days. So I might wait. I might wait to add a short onto this. Let it fully play out. Let all the moon boys get back in and then short it again. But I still don't think it can make a new high. But, don't invest based on this because I have to take a closer look, and we really need. Next week's going to be very important. What happens in the market next week's going to be very, very important, in my opinion. And I have not looked at the economic calendar at all. So. Alright, let's take a look at gold. Now, a lot of the ETFs have bull flags right now, mining ETFs, but it doesn't matter if the futures price is going to get slammed. Let's take a look at weekly charts. Listen, I think equities are going to sell off and they're going to smash the price on the paper markets for gold and silver, and it's just that's what they're gonna do, and that's what I expect them to do. So I don't see this as a buying opportunity at all. So I want to see and wait and see what plays out in the next 6 weeks, if not a couple months, because I guarantee you it's going to be very volatile and hectic. So right now is probably a good time to just relax, do research, which is what I'm doing, and when the opportunity presents itself, you have to have patience. We'll buy at the dip. Hopefully, we could definitely see the price of gold fall to $17.50 still, maybe even down to $16.50. And silver, probably gets smashed down to like. Why is this messed up? We'll look at it later. Alright guys, smash them likes, leave anything in the comments section, find me on other platforms, and join the free Telegram groups. There's the newsroom. Go to my website if you're interested in gambling and speculating in mining stocks or learning how to trade or anything like that. There's a private group. It's about 200 people in there. I am going to release more like research or reports and newsletters on mining stocks. So in the coming, probably next week, I have to finish it up. Alright guys, until next time.